I'm Vonnie Quinn in New York, in for Emily Chang today. This is Bloomberg Technology. Coming up in the next hour, President Donald Trump says he's the obstacle holding up a trade deal with China. Meanwhile, Apple is already coming up with a contingency plan to move out of China. Plus, Congress's probe into big tech kicks off with a focus on how the likes of Google and Facebook are challenging the news industry. We'll speak to a top lawmaker who doesn't think big is necessarily bad. And video game companies are trying to one-up each other at the E3 gaming conference in California. We'll hear from a top executive from Microsoft and Take-Two CEO Strauss Zelnick. But first, to our top story. President Trump says he will not finalize a trade deal with China unless Beijing returns to terms negotiated earlier in the year. Trump spoke to reporters as he left the White House for Iowa a day after he threatened to raise tariffs on China if President Xi Jinping does not meet with President Trump at the upcoming Group of 20 summit in Japan.
China is a major competitor, and right now China wants to make a deal very badly. It's me right now that's holding up the deal.
Meantime, Apple is geared up with a backup plan if the US-China trade war gets out of hand. The company's manufacturing partner says it is able to make all iPhones bound for the US outside of China if necessary. Hon Hai now makes most of Apple's smartphones at its Chinese factories. To discuss, we're joined by Bloomberg Technology editor Alistair Barr in San Francisco. How did Hon Hai decide that it was able to do this, to make all of Apple's products outside of China so quickly, Alistair?
So this was an executive who was talking to investors and other people in Taiwan, and our reporter in Asia, Debbie Wu, was there to listen. And this is more of a plan. The executive didn't say that Apple has asked Foxconn to do this yet, but he was saying that basically that they are very capable of doing it. It has raised a lot of questions. We spoke to an analyst over here who looks at the smartphone industry, and he was saying that if you're talking about actual final assembly, which is a lot of what Foxconn does, we're putting together all the components in an iPhone. If you're talking about that might actually be relatively easy to move. If you're talking about the whole manufacturing process for an iPhone, that would probably be a lot harder.
It's very interesting, though, because of course Hon Hai is in Taiwan, and we all know that politically China and Taiwan are a little bit at odds. Is there any danger that China would retaliate against Hon Hai if this were to happen, if Apple were to move all of its production to the Taiwanese company?
Yeah, that's a very good question. Apple has got to be very careful in general with this type of thing, so that some of the activities that are going on with Huawei in the US, where the US government is encouraging companies and consumers to steer clear of Huawei, that has really raised concerns about what happens to the treatment of Apple in China. So there's been a lot of concerns, for instance, that there'd be kind of an unofficial recommendation that Chinese consumers not buy iPhones and buy something else, and that market is still really important for Apple, so it is a big risk.
Hon Hai, which of course is also known as Foxconn, had a plan for a Wisconsin plant that would have employed 13,000 people. Does its plan for Wisconsin change materially at all, Alistair?
Actually, this executive who was speaking yesterday, he seemed pretty bullish about the Wisconsin plant, and he kind of placed it in the same type of strategic realm as this idea that you could move iPhone assembly out of China. And also India is something to consider too. Foxconn has plants in India already, and it was dealing with similar type of restrictions from the Indian government. So it certainly does have a lot of options around the world.
Alistair Barr, thank you. That is Alistair Barr of Bloomberg Technology. When it comes to taking an antitrust lens to big tech, it's not just a federal game, it seems. Today, 9 states and the District of Columbia filed suit to block the Sprint T-Mobile merger. Here's New York Attorney General Letitia James announcing the action.
Fabulous group of attorneys general of 9 states filed under seal a multi-state lawsuit in the United States District Court of the Southern District of New York to halt the proposed merger of telecom giants T-Mobile and Sprint. because when it comes to corporate power, bigger isn't always better.
Joining us to discuss now, Bloomberg Intelligence's senior antitrust analyst, Jennifer Rhee. Letitia James there presenting the argument for the state's attorneys general. Will this action have any impact on the DOJ, which is yet to make a decision?
You know, it's possible that it could. It may have been filed when it was filed in order to put some pressure on the DOJ to actually also sue and join with this suit, or file their own suit and likely to be consolidated with this one. But it is possible. It also could be that this suit was filed because the state attorneys general, who obviously are very much against this deal, seem to be assured or seem to think that the DOJ was actually ready to clear it. And so they want to step in and take control and take charge here.
Do we know what the state attorneys general would accept? I mean, they're clearly worried about consumer protections. Have they presented any plan which would be acceptable to them?
You know, we don't know that. Clearly, what's been offered to the FCC, which we know about by the companies, and some of these additional remedies it looks like the DOJ is seeking, maybe some satellite sales. They provided promises about lower prices, about building out 5G into rural areas. This was for the FCC. We know what's out there on the table for that. And so clearly, because this suit was filed, the states don't see that as proper. They don't see that as something that could fix the harm from this deal. It could be that there's some additional concessions that these companies could offer to the states that would get these states to settle, but that's unclear. But the one thing that is clear is they have a little more flexibility than the Department of Justice in terms of what they might accept in a settlement.
If the Department of Justice comes out with a decision, do the state attorneys general then back off? Will they be happy with an agreement on the part of the FCC and the DOJ? Would that be enough?
Well, no, it wouldn't, because they went ahead and filed this even with the DOJ looming. So any day now or weeks from now, the DOJ could come out and say, we've agreed to this deal and here's our settlement and the consent order and we're ready to clear it. The state's lawsuit is going to stay. They know that can happen and they filed. So, you know, in this situation, they're ready to go it alone if they have to go it alone. And it's interesting that you should bring that up, because if there is this bolstered remedy, one of the things the states are going to have to do in this lawsuit is prove to this judge not only that there's harm from this merger, but that harm can't be remedied or fixed by these two remedies, the FCC and DOJ remedy that the federal regulators have been ready to accept. And that, you know, that's just going to be an additional hurdle for them beyond just proving that the deal's harmful.
Now, John Ledger of T-Mobile and Marcelo Clore of Sprint have promised that consumer prices won't go up. Is that not enough? If that was written into, you know, the constitution of the combined company or what have you, would that be enough to satisfy the state attorneys general, who, after all, are only worried about the consumer?
You know, I think probably it wouldn't, because first of all, those kinds of promises are only going to last so long. It's not going to be, you know, it's not going to be ad nauseum. It's going to be 7 years or 3 years or 10 years. And the question would be, what happens after that when you have only 3 competitors rather than 4, and the 2 that really were the big price cutters and truly competitive against each other have combined? So that would be one thing. And the second thing is, it's not just about lower price. What they've also alleged is that there could be lower quality to certain consumers, particularly prepaid subscribers. And again, when you have only 3 companies competing rather than 4, even with the lower prices, it doesn't necessarily change the incentives to put money into R&D and to innovate or to make sure that the quality standards are maintained.
Bloomberg's Jennifer Rhee, thank you for joining. Coming up, we head to Los Angeles for our coverage out of the E3 Gaming Conference. Our conversation with Take-Two Interactive CEO Strauss Zelnick is next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the US on Sirius XM. This is Bloomberg. The esports market is booming, with highly skilled players, arena-sized audiences, and a revenue projected to reach $1.8 billion by 2022. Bloomberg's Shelley Hagan takes a look into the up-and-coming business.
It's a far leap from the penny arcade. Esports now takes the center stage of the gaming world, with highly technical players, arena-sized audiences, and big sales. The global esports market raked in $865 million in revenue over 2018, with nearly 26 million viewers in the U.S. The audience is largest in Asia, boasting 50% of the world's viewers. That's compared to just 12% in North America. And with the E3 conference underway this week in California, all eyes are on the booming business. Two California-based e-gaming companies, Activision Blizzard and Electronic Arts, have a combined market cap of more than $60 billion. Private investment in esports is growing as well. Total U.S. venture capital investment reached $1.8 billion in 2018, up from $32 million in 2008. That's a more than 5,000% increase in a 10-year period. Cloud9 Esports, a North American team, recently raised $53 million last year. Teams compete in popular games from Fortnite, World of Warcraft, and League of Legends, which is the video game with the largest number of players, estimated to have totaled 100 million players. And the winners take home more than a high score. The largest prize pool was close to $26 million at the International 2018 Dota 2 Championships in Vancouver, Canada. And with the global market projected to reach $1.8 billion by 2022, it's far from game over. Shelley Hagan, Bloomberg News, New York.
Now let's head over to the video game industry's largest annual gathering, E3, which kicked off today in Los Angeles. Developers including Microsoft, Activision Blizzard, Electronic Arts and Take-Two Interactive, just a few industry players participating in the event to highlight upcoming releases. This year's conference is a little bit different than years past. Instead of focusing on hardware and new titles, a lot of the conversation has to do with streaming and how these games are being played. Take-Two Interactive CEO Strauss Zelnick joins us now. Strauss, what can we look forward to in terms of new releases from Take-Two Interactive?
Well, here at E3, we're showing Borderlands 3, which comes out September 13th. It's obviously the third in the iteration of the Borderlands franchise. We're super excited about it. And we have 100 different stations where you can play the game here. People seem really happy to be playing the game. Now, so we couldn't be happier with it.
So in terms of the pipeline, what do we expect from Take-Two beyond that? A lot of people are talking about Red Dead Online, for example. It exited beta in May. Should we anticipate some more of Red Dead?
Well, you should be expecting more content for Red Dead Online. There'll be plenty coming. That's what Rockstar Games has said. More content also coming for Grand Theft Auto Online, which continues to be a big title 5.5 years after its original release. And in terms of our upcoming releases in this year, we obviously have NBA 2K coming and WWE 2K. It should be a very exciting year for us.
Are you interested in bidding for any other sports licenses? You mentioned NBA, you also have WWE. What else are you interested in?
Well, the sports business is pretty well spoken for in the video game space. The NFL property is under exclusive license. One of our biggest competitors controls the FIFA title. We have brought out other sports. We have golf, for example. We've had boxing, we've had hockey. Right now our focus is on golf and, of course, basketball.
We're seeing more and more subscription models. What is your plan for subscriptions and indeed for streaming, Strauss? Are you launching your own platform or anything like that?
So we would want always to distinguish between a technology, streaming, and a business model, subscription. And we're interested in both, but they're very different animals. Of course, you could have a subscription business without streaming, and you could have streaming without subscription. We're excited about the upcoming launch of Google Stadia. We're excited about many other potential developments in the market. We're supporting Google, we're supporting Microsoft's xCloud, and I suspect we'll support others as well. Subscription vehicles, many are being developed, some exist already. We support Game Pass on certain titles. We're open-minded. In terms of a direct-to-consumer presence, we have our own small direct-to-consumer presence, and we're obviously examining that market as well. Our view, though, is, generally speaking, when people look to acquire entertainment properties, they want to go where they can get a multiplicity of properties, not typically where they can only get an offering from one company.
Interesting. Strauss, you've had a partnership with Tencent for China since 2012. How concerned are you about the current standoff between the US and China for growth for Take-Two Interactive there?
We're very optimistic about China. Our relationship with Tencent is great, and the NBA 2K Online title, which is a joint venture between ourselves and Tencent, is the #1 PC sports title in China with 45 million registered users. And actually, the recurrent consumer spending on that title is up about 74% year over year. We also distribute into China in a myriad of other ways. Our NBA 2K title was just approved for PS4 in China. We think there's a great market opportunity in China, and we're hopeful that the trade talks will be resolved amicably, positively, and in a way that's beneficial for the overall entertainment business.
Strauss, I have to ask you, you're interim chairman of the CBS board, and reportedly there is a meeting Friday to discuss a Viacom merger. What would you make of a Viacom merger? What can you tell us about this?
Well, out here I'm talking about the video game business, so not much actually. My primary focus right now is on the excitement surrounding Take-Two and its upcoming releases.
Sure, but if there were to be a board meeting, presumably you'll have all of your E3 duties done by Friday.
As I said, I'm pretty focused right now on the video game business.
All right, Strauss, we will look forward to hearing from you Friday or post-Friday. Thank you very much, and the best of luck at E3. That is Take-Two Interactive CEO Strauss Zelnick. Coming up, more of our E3 coverage out of Los Angeles, how Microsoft is gearing up to take on Google's newest streaming platform next. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg. Back to our coverage now of E3 in LA. More than 70,000 fans are expected at the video game industry's biggest event. This year, there's a big shift of focus from game consoles to streaming platforms. Now, Google has upped the ante, announcing a $10 monthly price tag last week. Microsoft, though, is not far behind with its xCloud. Bloomberg's Ed Ludlow caught up with Microsoft head of Xbox Game Studios, Matt Booty, who revealed a bit more about the service.
Well, for us, everything starts with great games, and the way I approach it is that if you start out to design a game for a certain strategy, sometimes you can paint yourself in a corner. But if you set out to make a great game, then you can support just about anything you want to go do later. So we've designed some games that have turned out to be fantastic in Game Pass, but nobody in our studios sat down saying, I want to make a good Game Pass game, right? So with streaming, first and foremost, we want to make a great game. But I think it unlocks some amazing things in terms of how we'll approach multiplayer and how we'll approach types of gameplay, because you'll be playing on the go, perhaps in shorter sessions, or maybe even you'll be doing things that are related to a game that you'll spend most of your time on in your living room with a console.
So how do you see fans of your games playing, though? Because it won't restrict you to the Xbox console. Do you see most users playing on the Xbox? Do you see them using PC? How is that balance going to work?
Yeah, for us it's all about choice, and we see them playing across all those devices, PC, console, on mobile. It's one of the things that we're so excited about being here at E3 is that we really have got a great selection of games. You know, in our briefing we showed 60 games, 14 from our first-party studios, and everything we do is about putting the player at the center of what we do and providing choice. So we announced our Game Pass for console will now be coming to PC, so that's all about choice if you want to be a console gamer or a PC gamer. And for us, Project xCloud and streaming is about expanding that choice and giving people more places to play.
Google priced their Stadia at $10 a month. I think some people found that surprising. It made it accessible to a broad range of people. Do you expect xCloud to be competitive pricing-wise?
Yeah, we haven't shared any pricing yet. We'll talk more about that in the fall.
But you do think it will be competitive with Google Stadia, or Ubisoft yesterday coming out with $15 a month?
Yeah, I think you can expect that.
One other area that people were talking about is basically the involvement of celebrities in games. Big unveil Sunday. Keanu Reeves comes out on stage and appears as a character in Cyberpunk 2077, which is CD Projekt's big game. What did you make of that?
Well, it was a big secret to a lot of us, too. And to be honest, I think he was pleasantly surprised when he came on stage and saw the enthusiasm for our fans and just saw how excited people get when someone like him shows up in a game as an authentic character. And I think that's key, is that we saw before he came on stage his character in the game, and I think people felt that it was authentic and genuine, and they're just excited to see him as part of it.
People aren't talking as much about consoles at this E3 as perhaps they have in previous years. What do you make of that?
Well, for us, again, it's about choice. It's about putting the player at the center. We know that there will be people that want to play games in their living room. It's still the social hub of our families and our homes. And the best way to play a game that will look the best on the biggest screen is going to be a console in your living room on a big TV. And that's why we're as committed as ever to going forward with the console, and why we made Project Scarlet such a focus for what we're doing here today.
I wanted to ask you about China. China is this big video games market. How do you view China?
Well, we've had some pretty good success in China, particularly around Minecraft that we took to China with our partner NetEase. We have some other games that we're taking to market with Tencent. For me, I think the key has been finding local partners in market that really understand the Chinese player, understand how to navigate some of the regulations. And so our approach has been to partner with other folks and bring our IP very authentically to the Chinese market.
One of the concerns this year is about game approvals, and in April the regulator kind of changed the requirements for game license approvals. How do you see that playing out this year?
Well, again, that's why I think it's so important to have partners that understand the nuance there. It's something that's very difficult to keep track of, from Seattle. So we're very grateful for the productive partnership we've had with people like NetEase and Tencent, because they know that stuff better than anyone.
And given that China is the biggest market, both in terms of revenue and also the players themselves, are you concerned that perhaps this trade war that's ongoing between the US and China, that basically that may limit, US developers' access to that market?
Yeah, I'll just say that, again, we've got strong partnerships with people, local there in China, folks like NetEase and Tencent, and we'll really look to them to help us navigate that.
And that was Matt Spoody, Microsoft Vice President of Xbox Game Studios from E3 in Los Angeles. E-cigarette startup Juul reported its first quarter sales of $528 million. Now that's a 23% increase from the previous period. In November, Juul opted to stop selling certain flavors of its nicotine pods in stores to mitigate its breakaway popularity with underage users. That had led to a drop in sales at the end of 2018. Coming up, Dropbox is coming after Microsoft and Google, how the productivity software company is evolving from a file storage system to collaborative workspace. That's next. This is Bloomberg. Bloomberg Technology, I'm Bonnie Quinn in New York. Dropbox unveiled a new integrated workspace Tuesday in the biggest overhaul of its software to date. The company introduced a new desktop workspace with updates to its website and mobile app that allow customers to combine different files and collaborate across teams. Bloomberg's Carolyn Hyde and Romaine Bostic spoke with Dropbox CEO Drew Houston about the new changes. Take a listen.
We're really excited about it. It's been a big morning. We've launched the biggest change we've ever made to our products, an all-new desktop app. And it evolves the Dropbox experience from a folder full of files to a living team workspace where you can have not just files, but any kind of cloud content, so G Suite, things like Google Docs, Sheets, and Slides, really anything that you're using, and integrations with tools like Slack and Zoom. And so from within Dropbox, you can send people messages, you can start meetings, you can send things out for signature, see your calendar. It's a much more integrated workspace because we saw so many of our customers and frankly ourselves struggling with there are all these new apps and they're great, but how do you stitch them all together? We see a big opportunity to make that a much more seamless experience. So we're really excited about it. Can't wait to get it out there.
So Drew, do you see this type of integration of these apps? Do you think that this is something that we're going to see more of, not just in your particular corner of this tech space, but with other sort of types of software and software services?
Yeah, absolutely. I mean, certainly most, if not all, companies are going to have integrations, but the opportunity we saw is to organize it, to really bring it into a well-designed, coherent experience. And I would say different from some of the messaging tools, what Dropbox allows you to do is within a native app, you can have all your content in one place, work across all these different ecosystems. And instead of the interface just being a list of messages, you can see here's what we're working on, here's our project, here's the most important pieces of content. We think from a design standpoint, it's a pretty different approach.
Drew, from the perspective that the aim is to keep everyone sort of coming back to Dropbox, as much as you're working with all these other apps, you're also competitive for people's eyeballs, for people's time. Do you really think that the plethora of new apps, as you say, that we're having can really survive all in and of themselves? The fact that you've got deals with Atlassian, but we've also got Zoom, Slack, Google, Microsoft, yourselves. Do you think the ecosystem can support all these different players?
Well, we certainly do, and I think what we're seeing is that users want choice. They are using all kinds of different apps for communication, for content, for coordination, and what's missing is a way to stitch it all together. And so that's the role that we think we can play. It's very similar to the role we played in the beginning, like helping you get to your stuff from all these different platforms and operating systems. Now we're thinking about how do we organize and simplify your working life and help stitch together all these different things. And second, I'd say a lot of what we're doing is complementary. So you're not going to stop using Slack or stop using these other tools. In fact, we're making it easier for you to get them. And so we find that a lot of our customers love using these different tools, but they need a more integrated experience, and not having that means you're always switching back and forth, and there's a lot of friction.
It's actually sort of interesting that within the enterprise software space, we're talking about numerous players, when actually the argument at the moment from Capitol Hill is there's too few players when it comes to the technology space. They're monolithic, they're monopolies, they need to be broken up. How do you as a CEO in the technology space take this sudden viewpoint coming from Capitol Hill, and do you think it's got grounds in any way?
Well, I think it's an important conversation to be having, and from our perspective, we think competition's a good thing, and we need a level playing field. So it's an important conversation.
One of the other conversations out there, Drew, is just the idea of the responsibility that a lot of tech companies, particularly those that traffic in content, have. And I wonder how you view not only what's happened, but really what type of responsibility do you think the companies themselves should be shouldering to make sure that their services are used in a, I guess, proper way?
Sure. Well, I mean, trust and safety is the first thing on all of our minds, and all aspects of that, whether it's the security of service or whether it's the content that people are putting on services like Dropbox and keeping them safe. I think we're seeing a broader conversation of a lot of technology companies finding themselves in a situation of like, all right, how do we protect free speech, but then what do you do if people put up content that's objectionable or unsafe, or things that aren't true? I mean, fortunately, our role is a little simpler. People don't usually use Dropbox as a publishing platform, but we certainly care about the safety and well-being of our users, and to the extent that anyone does put objectionable or unsafe content on Dropbox, we take it down.
Dropbox CEO Drew Houston there. Meanwhile, Line, which counts 80 million monthly active users in Japan, has been investing heavily into fintech operations. Speaking to Bloomberg, Line's co-CEO said they may see the new businesses break out even sooner than planned.
It depends on how fast we secure the users. So if we penetrate in this domain, so as we expected, I think we can be profitable in the near future. For example, 1 year, 2 year, achieve the break-even point.
And coming up, we head to Capitol Hill to hear one lawmaker's thoughts on big tech's big power versus the media. Our conversation with Congressman Doug Collins of Georgia. That's next. This is Bloomberg. The House Judiciary Committee began its hearings on whether or not big tech has gotten, well, too big. And they kicked things off by looking at the detrimental effect the internet has had on the state of journalism. For example, according to a December study from Pew Research, more American adults now get their news from social media than they do from print newspapers. Joining us now is the top Republican on the House Judiciary Committee, Congressman Doug Collins of Georgia's 9th District. He was part of today's hearings. Also with us in San Francisco, Bloomberg executive, global editor for technology, Tom Giles. Congressman, let me start with you. We all know that newspapers, and in particular local news, has seen tremendous cutbacks. What was your main takeaway from today's hearing? Is there anything that can be done legislatively to combat that?
Well, I think the act that David Cicilline and I have put forward, the Journalism Protection Act, is something that is begin to talk and the discussion on how tech and how local news and the content creators can actually work together to provide a better platform so that everyone in the process can be enriched in this. I think the interesting thing is that we don't want to lose out on the local content, local flavor that the big platforms are just not going to cover. And frankly, the big platforms and tech platforms don't want to have to lose out on the content that actually helps them generate as well. But this is an opportunity for everyone to come to the table and begin to have ideas on how we can move forward in the future in a symbiotic relationship instead of one that seems to be at odds at times.
Representative Collins, this is Tom Giles. My question for you is, how exactly will your legislation help remedy the situation?
Well, what it will do is instead of the smaller newspapers, and like take for example my district, which is a relatively rural district with mostly fed by a single county or a weekly paper in those areas, they have no way to really in a way negotiate with the bigger platforms on their advertising rates and respect for their content that is being taken at this point. What our bill simply does is for a 4-year period takes out the antitrust exemption to allow these newspapers in various areas and sizes to come together and to negotiate in a better bargaining position to say, how can we continue to protect the content on the local area, get a better rate in advertising and a cut of that we're being taken from us now, and also allows, frankly, the tech side of the House to come back in and say, how can we better enhance what we're offering to our people as well?
Congressman, would you ever subpoena executives or documents, even if they were proprietary?
Well, I think going into subpoenas and everything else has been something that's been overblown, frankly, by some on the committee. This is the time, and what we've agreed to is to have hearings, and to simply say there's a legislative solution or to subpoena as if this is an adversarial situation. I want the tech companies and the others to come into these hearings and saying, how are we in this state of technology right now? I'm not one who simply says it needs to be broke up because it's big. In fact, I'm an anathema to that. I think what we actually need to say is how do these new technologies work in the environments today, and how does their competitiveness work within traditional, what is known as antitrust. When we understand that, then everybody has a part in the picture to play as we look forward to the privacy and data and commercial aspects of how tech dominates and how our other industries as we work forward with them. So to come to a solution, we have to have the input first, and I think most players are going to be involved in that.
Representative, do you believe that there has been an effort to suppress or downplay conservative views on social media?
I think there's some valid and legitimate questions. We've had some of these conversations before with the social media platforms. I've talked to Sundar actually at Google. He's been in my office. We've had these kind of conversations about how the algorithms work, how the searches work. We've talked with Twitter. We've talked with Facebook. These are conversations that need to happen, and I think especially with the YouTube issue, we've got to make sure that at a certain point in time that the safe harbor provisions are working as they should, but also that the platforms who have enormous responsibility for what they put out on their platform now, and it's not just simply a billboard where everybody goes by and puts up what they want to put up. There is editing involved here, and I think that's a very valid conversation for these tech platforms to have to come and answer for.
Congressman, what's your response to the argument that the big tech companies have actually helped media companies stay afloat and indeed thrive by providing them a low-cost distribution platform?
I would not disagree that there's not been areas in which they've been able to thrive, and I think that came out at the hearing today that some of these organizations, and along with the big tech platforms, have an ability to increase their viewership or to increase their presence. However, at the end of the day, though, many of the smaller news organizations are having their content taken without being able to access the profitability part, which is in the accounting revenue and the ad revenues, or pay for the actual content being used. And I think that's where the disconnect comes. It's not a matter of the pie being enlarged. The question is there keeping some of our folks away from being able to at least access what is rightfully theirs from a content perspective?
We understand that the DOJ and the FTC have had a meeting of the minds and are in a way dividing the tech industry. What's your sense of how effective law enforcement and regulation can be in terms of reining in the technology industry?
Well, again, it goes from a simple perspective. If the DOJ and the FTC are actually looking at this from a perspective of saying, has there been, issues that they need to investigate from a legal standpoint that need a legal remedy, then I'm sure that they will look into that as a forefront. The question I have is not simply to say that we need to step in simply because a company is dominant or a company is big. Sometimes you get big simply because you provide the better mousetrap, and that is never something from my perspective that should be punished. So I think as they look at that, I would go as much if there are criminal acts that need to be involved. I'm sure that they'll be there if there's antitrust issues. I'm sure that that's going to be looked at. But I want to see it come forward in a position, especially from the congressional standpoint, to say how does this work in the overall economy and how do we let everything work together?
Congressman Collins, Democratic presidential candidate Elizabeth Warren has been advocating the breakup of big tech. Is it possible that this could be a rare moment of bipartisan agreement? Do you see any possibility for you all on the Republican side and somebody like Elizabeth Warren to work together on something like this?
I don't believe so if she comes at it with saying we need to break it up simply because we need to break it up. Elizabeth Warren spouts ideas sometimes simply to get press releases so that her fledgling presidential campaign might get some press picked up. And simply saying that a company needs to be broken up because they're too big is what Orrin Hatch used to call hipster antitrust. It's just that we don't like it because it's big. And for Elizabeth Warren to say that that's what needs to happen without explaining how that would actually happen, how it actually would make it better, the next 3 or 4 questions would be, is if you did break them up, how would you break them up? Who gets the algorithms? How is it actually affecting competition? This is not an AT&T with mama bells and baby bells that could actually be distributed. This is actually intellectual property. This is algorithms. These are techniques. These are actually many times ideas that we're talking about here. And so I think sometimes the quick reaction to say just break it up and that'll make it better is simply a very political answer for someone desperately searching for headlines.
All right, Congressman Doug Collins of Georgia, thanks for joining. And of course, Bloomberg's Tom Giles, as always, thank you for joining. Brian Goldberg may not be a Rupert Murdoch or an Arthur Sulzberger, at least not yet, but he has made a big impression in the media world in just a few years. Now, he's rebooted a website that once mocked him. We covered Goldberg in the latest issue of Bloomberg Business Week, and editor Max Chafkin joins us now. First of all, the big reveal, that website is?
Gawker.com, the gossip tabloid website that was famously basically sued into bankruptcy in a complicated litigation that was financed in part by the venture capitalist Peter Thiel on behalf of the wrestler Hulk Hogan. Incredibly weird story, and the ending is in some ways even weirder. Goldberg is known primarily as the founder of Bleacher Report, which is a very successful sports website owned by Turner. They bought it for around $200 million, and he started this website Bustle, which is sort of like a collection of online magazines, primarily a women's magazine that's on Bustle.com. So this is the next piece of that portfolio.
And he proved himself with Bleacher, right? In the beginning, people didn't think it was going to be a success, and it used the model that's now become mainstream practice of citizen journalism. So he has a bit of a track record at this point. About 90% of Bustle's revenue comes from advertising, though. Is this sustainable?
Well, most online media companies are in trouble now because of this bet, because online advertising has not been a growth business. All the revenue has been going to basically 2 companies, Google, Facebook. And most of the big players here, including some of the big media companies like Condé Nast and Hearst and the New York Times, are all doubling down on subscription and trying to find ways to drive additional revenue, or with e-commerce. And Goldberg is basically going with clicks. So in a lot of ways, it looks like a media business circa 5 or 10 years ago. And so far so good. It's sort of working for him.
Except that there are problems associated with that, not least of all that the writers themselves are not even paid minimum wage some of the time.
Yeah, I mean, we saw this model with a lot of companies, like I said, 10 years ago. Demand Media, which actually went public and then kind of sputtered, in a bad way, was what was known as a click farmer. That's at least what critics called it. Goldberg has kind of had the same charge leveled against him, with writers basically getting paid, as you say, very little per article, dollars per post, or just a few dollars per hour. Now, it should be said that that, in response to our article, Bustle spokespeople basically said, number one, we pay New York City minimum wage, which is $15 an hour, which you can take or leave, I suppose. And they also said that, rates have been going up. Their position is basically they're trying to build a sustainable model here. Yes, these may be lower than some people would like, but we're doing better. We're building a real business.
If we look at BuzzFeed and Vice, we've seen mass layoffs recently, but Goldberg does seem to be onto something. Could he be the next Condé Nast? Could he be putting the next Hearst out of business?
One of the points that the article makes is that Goldberg wrote a post saying that the key to success in media is having no shame, which I believe is true. And I think that quote, which is that they're going to be the next Condé Nast, would be an example of shamelessness. Now, that said, big media companies have grown out of have had humble origins. And I guess the point is you never know. I mean, I think we've definitely seen an evolution with the perception of a brand like Bustle, where it was initially kind of the butt of a lot of jokes and is now taken, I think, pretty seriously by people. And you could see that same trajectory playing out with some of these other brands.
Bloomberg's Max Chafkin, a great story. Thank you. And hear more of the magazine's editors and reporters every Saturday and Sunday mornings on Business Week on Bloomberg Television. Still ahead, Bitcoin saw its best month in May in almost 2 years. But is the crypto winter really over? We'll discuss all things blockchain and crypto next. This is Bloomberg. Crypto security startup Fireblocks announced today it'll raise $16 million in Series A funding from firms like Fidelity-backed 8 Roads and M-State. The company, which helps institutions safely transfer coins between exchanges, already has one high-profile customer, digital currency group's Genesis Trading. Digital Currency Group is the most active investor in the blockchain and Bitcoin industries, backing more than 140 companies in 30 countries around the world. Joining us to discuss all things blockchain now is Digital Currency Group founder and CEO Barry Silbert. Barry, I have to wonder if it isn't, almost a cheap bet to put some money into the next crypto or the next blockchain company. After all, one or two or several of them will be winners at the end of the day, right?
Well, we certainly think so. As you just mentioned, having invested in 140 companies around the world, we're certainly spreading our bets.
Now, why is that? Are they not very obviously distinguishable from one another? Why would you be spread so, I don't want to say thin, because 140 companies is not being spread thin, that's being spread wide?
Yeah, well, I think our strategy is really more about focusing on investing in the asset class, investing in Bitcoin and certain other digital assets. And so our investments in the companies is really an attempt to build the infrastructure that's required to make this asset class as big as we think it can become.
How was May in the industry? It feels like there was a rebound, but things had got a little bit depressed, at least for Bitcoin and related cryptocurrencies.
Well, anybody who's been in Bitcoin as long as I have, since 2011, we've been through quite a roller coaster. Their price has gone down 80% 4 times, but in the past 4 times, the price has hit record highs afterwards. And so if you look at the price chart for Bitcoin, it looks like perhaps we're coming out of the crypto winter and we've entered the crypto spring.
So crypto is, on the one hand, but then on the other hand, you have blockchain, and the blockchain technology is being adopted by mainstream businesses as well as, non-mainstream businesses. But it seems to be more acceptable to talk about blockchain in some ways than, digital coins and digital currencies. What blockchain companies do you have your eye on as the ones that will make it?
Yeah, it's interesting. We've invested in probably a couple dozen companies that are building infrastructure using blockchain for non-financial use cases. But what's interesting is the ones who are getting the most traction are the ones that are building infrastructure for the asset class, exchanges and compliance software, and companies building custody solutions. And really, I think what's happening is this growing awareness and I think a recognition that Bitcoin Bitcoin and other digital assets are here to stay. So really then the question is okay, well, if you want to get involved in the asset class, what are the different ways that you can do it? You can invest directly in Bitcoin, you can invest in one of our companies, Grayscale, has a publicly quoted product called the Grayscale Bitcoin Trust. So there's lots of infrastructure being built that is making this asset class accessible to the masses now.
And of course, we began our segment by talking about this crypto security startup Fireblocks. As this space grows, and presumably it is growing, obviously there'll need to be more crypto security companies. Where should we be looking?
Well, we've invested in half a dozen companies that are providing that infrastructure. And what's exciting is some of the larger, well-known financial services companies, like Fidelity as an example, are soon launching their own custody solutions. You have the New York Stock Exchange parent company ICE launching an exchange called Bakkt. So if you compare the infrastructure today relative to where it was right before the last Bitcoin bull market in 2017, it's really night and day. And so now the question is not if institutional money is going to move into the asset class, but the question is really when.
All right, Digital Currency Group founder and CEO Barry Silbert, thank you for joining us on Bloomberg Technology. And that does it for this edition of Bloomberg Technology. Remember, Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg.